All right, here's 3 reasons why we're pretty optimistic about where mortgage rates are headed through the end of the year. So, first is earlier this week, the Fed said they're going to ease up on something that's called quantitative tightening. And what that means is just a fancy term that the Fed is using to say basically they're going to do what they can to speed up the economy because the economy is showing signs of cooling down faster than they expected. And so, quantitative tightening has to do with their strategy to buy mortgage-backed securities. If you're really interested in the details, give me a call and I can explain it. But the bottom line is what the Fed said they're going to do about quantitative tightening is good for mortgage rates through the end of the year. Number 2 is the job market is showing signs of softening. Now, we haven't gotten any new job reports since the government shutdown, but before the government shutdown, the last jobs reports we were seeing were showing that the job market wasn't looking all that great, which is another indication that the economy is slowing down. So after the government shutdown ends and we start getting job reports again, we're not really expecting anything to change on how job reports were looking beforehand. And then lastly, inflation isn't really stealing the spotlight like it had been for a couple of years. Those are 3 reasons why we're optimistic about where mortgage rates are headed through the end of the year. And at the very least, it's 3 reasons why we don't really see rates increasing through the end of the year. If you have any other questions about mortgage rates or anything related to home buying or refinancing, feel free to give us a shout. Thanks.